Good morning. As expected, a late FNO related sell-off dragged the Nifty below the psychological 200 DMA mark. Looks like the start today could be on a subdued note. A lot of technical levels are doing the rounds, which tend to happen when the market is weak or even in the rally mode. The near-term outlook for Nifty is weak, with the intermediate support seen to be around 5,565. The next important support level to watch out for is 5,500. A few of them are also talking about 5,300 to 5,350. Though there is no immediate cause for alarm, the fact remains that the undertone is fragile after the successive sell-off since Diwali, when the main indices almost hit new record highs. There are few macroeconomic headwinds confronting the India markets, and things may take a while to stabilize. The sentiment may continue to be undermined by persistent FII outflows, which in turn could hit the rupee. Inflation has to moderate substantially for any material turnaround to happen. The government too needs to pull up the socks. Union budget will be UPA2's big moment to resurrect its sagging image and keep the growth momentum going. It would also help if the centre starts taking positive steps on the reform side and gets its fiscal house in order as well. FDI and current account deficit are the other areas that urgently need damage control. We're going through proper correction after 2 years of solid gains on the back of record amounts of overseas money. Whether the trickle turns into deluge remains to be seen. Given that the India's overall growth story is still pretty sound, FIs can't afford to ignore India for too long. So there is still hope that things could start looking up in few months' time. ONGC, JP Associates, Siemens, HCL Infosystems, BOB, Crompton Greaves, IOB, Havels India, Eros International, OBC, Sun TV, Titan and UCO Bank are among the notable companies announcing their results today. Cipla, L&T, Kingfisher Airlines and Reliance Power are the other counters that might see positive action owing to the media reports. FIs were net sellers of Rs 16.5 billion in the cash segment on Thursday according to the provisional NSE data. The domestic institutional investors were net sellers at Rs 2.55 billion. FIs were net buyers of Rs 5.82 billion in the FNO segment. The foreign funds were net buyers of Rs 4.28 billion in the cash segment on Tuesday according to the SEBI website. Moving on to our recommendations, the technical calls for the day are: we recommend traders to buy India Siemens above Rs 100 with the stop loss placed at Rs 97 and for the target price of Rs 106. We advise buying TCS in the range of Rs 1185 to Rs 1188 with a stop loss of Rs 1163 and for the target price of Rs 1238. Our derivative strategy for the day are: long ACC February futures in the range of Rs 1036 to Rs 1039 for the target price of Rs 1066 and with a stop loss placed at Rs 1024. Long NMDC February futures in the range of Rs 268 to Rs 269 for the target price of Rs 278 and with a stop loss placed at Rs 264. Thank you. Wish you have a great day ahead.